Time now for Options Corner. Joining us to take a deeper look at this chart is Rick Ducat, lead market technician here on Schwab Network. All right, Rick, what trends do you notice when you look at the chart for AMAT?
Yeah, so, semiconductor sector has been such a prominent focus lately here. We can see that AMAT, though, broadly in line with the tech sector overall, the XLK ETF, both up about 26%. So underperforming the SMH semiconductor ETF here, which is up about 43.5%. When we look at some of the major companies in the semiconductor space here, we can see the storage companies, Micron, Seagate, Western Digital. Those are very strong here. The chip makers that are more graphics and CPU, NVIDIA, AMD, Intel, those are roughly in line with companies like AMAT that are more of the picks and shovels plays, the ones that make the chip equipment, exactly. And then we also have the industrial chips down here like ADI. Those are the ones that are the laggards. So an interesting sector to dive into. When we look at AMAT more specifically, a rising wedge type shape has been the prevailing pattern here. We topped out near 242. Then we hit a new low recently relative to our current prices at about 223.38. So drifting downward out of this pattern here, but earnings can often be a major catalyst here, so we could see a new trend beginning after the close today here. If we were to add some of our other studies, we can see that RSI, our measure of momentum, has been trending down, showing a bit of bearish divergence here. Pretty common situation, though, as we head into earnings in this case. When we look at our moving averages, price seems to have found some support near our yellow 21-day exponential moving average. That comes in at this time just above 228, so this could be a very short-term supportive area to consider. Beyond that, we have another relative low at 216.07. Then our 63-day EMA comes in at 209.65. So those would be some areas to consider to the downside as well. Our volume profile study, this shows volume nodes, heavy trading activity areas. One is right here, right about where price is now, around the 230 level. So this would be an important area to hold on to for the bulls. To the downside, we can see that kind of in between our two support zones that we mentioned here, around 220. That's the other heavier trading activity point. We can see our standard deviation channel. Our +1 is down here, lining up with that supportive area near about 223. Our +2 close to those old highs near about 247.67 based on yesterday's close. Finally, our expected move for December 19th, about 13.4%. The lower end is below our supportive area here. The higher end would put us more in uncharted territory. So be on the lookout for those boundaries. Those come in at around 200 and 260 or so.
All right, thank you, Rick. That is Rick Ducat, the Duke of Data himself. Now to take us through an example trade, we've got Tom White, senior options contributor and co-host of Fast Market. So, Tom, what's the approach you would take for an example trade, given we've got earnings in front of us and the outperformance of AMAT year to date?
Yeah, the bar's really high here, Diane, going into this earnings report. And you talk about picks and shovels within an industry. NVIDIA isn't. AMAT is the picks and shovels in the AI because they're building all the systems that make AI, and they use NVIDIA. So when going into an earnings play like this, you look at some of their competitors, Lam Research, ASML, both rallied post-earnings. So I looked at a strategy. If you think AMAT's going to do the same thing, this strategy takes advantage of that. So I looked at a bullish call diagonal here where I'm going to go out to the November 21st monthly cycle that expires in 8 days. We're going to buy the slightly in the money 227.5 strike call. And then against that, in the near term, November 14th, weekly options that expire in just 1 day, we're going to sell the 240 strike call. So a bullish $12.5 wide call diagonal that sets up with about that one standard deviation that the option market's pricing in of about $10.5 either way. So you're going to pay roughly about a $7.5 debit if the stock opens up here around 229. That's going to be your risk, $750 per spread on a $12.5 wide call diagonal. So you're paying a lot less in the width of this bullish position. Now, if I pay $7.5 debit, my break even, anything above about 230 is going to be profitability on this trade. So you do need to move higher, but less than 1% to the upside and well within that one standard deviation. Now, why am I paying only $7.5 for a $12.5 wide call diagonal? Well, it's about implied volatility levels. I'm buying about a 65% implied volatility on aggregate on that 227.5 strike call in the November 21st monthly options, selling about 108% implied volatility in the near-term options. So we've got that event risk that's causing implied volatility levels to be elevated in that short-term option that I'm selling on the 240 strike. You definitely need to move to the upside. You want it to go up at or near 240, but anything above 230, going to be profitability on this bullish call diagonal.
All right, thank you, Tom. That's a bullish call diagonal. There's the choice for AMAT with earnings due after the close of trading today.